Welcome back to the Exchange, everybody. The trucking industry tracking the fallout from Yellow's recent bankruptcy filing. Frank Holland is at the Deutsche Bank Transportation Conference over across the river in New York City with what freight CEOs are saying about that and the state of the transportation trucking industry generally. Hi, Frank.
Hey, Tyler. Just a few minutes ago, we spoke to the CEOs of rivals of the now defunct Yellow, Old Dominion and Saia. Those stocks outperforming the markets today, and they can continue to outperform as $5 billion in annual freight volume. It continues to move to other carriers since reports of financial and union issues at Yellow surfaced near the end of June. Other truckers in the less than truckload or LTL space have seen their stocks really surge higher. That includes the largest operator, FedEx. Also, when you look at XPO and Saia, both of those up more than 20%. Less than truckload is where multiple companies, they put shipments in the same truck. So just yesterday, Saia issued a mid-quarter report with a 6% increase in July volume and a double-digit volume increase month to date. Their customers include Starbucks and Home Depot. Saia CEO Fritz Holzgreff, he expects the surge for capacity to continue throughout the holidays.
We saw mid-single-digit increases up to the disruption, so I would expect probably from there you'd see that going forward. What you're seeing right now is that redistribution across all the competitors in the marketplace. And I think the efficient operator, the one that can absorb that capacity consistently, those are the ones that are going to be long-term beneficiaries of this.
So nationally, we've seen a very clear upswing in rates in recent weeks, still negative year over year, but you see the uptick in just the last few weeks. We also spoke with the CEO of Old Dominion. That's the trucker for Tesla, Walmart, Amazon, as well as the suppliers of those big box operators. CEO Marty Freeman believes we're still in a freight recession, but he does see improving holiday demand.
Those suppliers are telling us that, their inventory levels are getting low, and they hope to build those inventory levels back up to be ready for the Christmas season. So we're hearing positive things from them. We're also hearing positive things from Tesla. You know, they're looking at increasing their production.
So higher rates and higher volumes. I also spoke with CEOs about higher diesel prices that have risen about double digits over the past month. They expect these higher diesel prices to be a tailwind for both their top and their bottom line, but the higher surcharges they charge for diesel, that could impact demand in the long term. Tyler?
So, Frank, let's go back to the question of Yellow Freight. What are these CEOs saying about acquiring any of the assets, any of the trucks, the equipment of Yellow?
Yeah, we talked quite a bit about that. So I spoke with the CEOs of Saia, Old Dominion, as well as the CEO of STG Logistics. That's a private company partly held by Oak Tree Capital. All three said they'd be interested in the real estate. That's the less than truckload terminals and not so much in the equipment. The real estate has a lot of value. Obviously, it helps you move containers in some cases or shipments in some cases. It gives you a home base. But they say they're not as interested in the trucks, not as much demand for the actual road vehicles. But the real estate, definitely some interest.
Well, maybe you and I should go in on one of these big trucks. They're going to be out there.
Tyler, let's do it.
Let's do it. Sounds like fun.
Let's do it. Me and you on the open road?
I love it. All right.
Open road, man. Just me and you. Rebels.
All right, Frank. Good to see you, man. All right, quick programming note.
As always.
You bet. Don't miss our exclusive interview with the CEOs of GM and Hertz coming up in the next hour. That will be on Power Lunch at 2:30. Mary Barra and Steve Scher will be with us.